Hi, all learners. In my last video, I conveyed about that we are very close to grid zone, and from there now we are down by almost a 10%. If you look at on a chart, we you will see that we are close to 10% down. It in our valuepicker.in this market breath. If you come on a market breath, you will see that in this particular time now I made one of my last video where I mentioned that almost we are close to grid level, and from there it came down. Now what is happening, even though we are very close to fear zone and it's continuously going down, it may further, because fear will not be like a instant reaction will not come. It may hover in that area like a fear zone. Most of the stocks will be below all their major moving averages, and people will be feeling not to buy at this moment. Though the market will not give you always the clear certainty to you that when to buy. But if you look at the present scenario, last 3 4 years, what has happened? Mostly market was driven by B2G. Mostly B2G businesses, whether it is a defense, whether it is a railway, whether it is a power related businesses, and that has given a tremendous good return. Now, many of the businesses are at a derating zone. It's not about no that whether you can take a right exit, right entry, whether we are evaluating properly a business or we are sitting somewhere no where it is really very overvalued and we have no idea. So I have made one video about that how to look at a valuation. First, why to evaluate? Because once you evaluate that, okay, no, this is having a potential, you will not scare about a small ups and down. As of now, market is like driven by mostly macro disruption, and macro disruption is happening. And it is like you, if you say that, okay, no, this kind of a market, it's a once in a century or after multiple decades, no, we see this kind of a movement. In 2008, we have seen 2008 was a financial crisis, only concentrated crisis on over USA. 2000, not 2008, and 2020 was around COVID crisis. So like it's a different kind of a pandemic. But as of now, what is happening? It is not concentrated only on USA. It is linked with Japan, multiple country, like they have their own issue war related, whether it is Russia, Ukraine, whether it is Pakistan, India, Bangladesh, multiple countries are having some kind of a geopolitical issues. So it is a different scenario as of now. So it is not, okay, no, go and straight buy. If you are holding your long-term pick, you cannot just move out by taking a stop loss in this panic moment. You should wait, because if a company is nothing but it's not price or moving averages. Many companies goes down their moving average and come up. Now the point is people look at, yes, when a business goes below moving averages, that means most of the short-term investors are taking an exit. And it is a way of approach. Like some people find that, okay, no, it is overvalued as of now, so I should take an exit. And if it comes like reasonable price, because last 3 4 years, no, multiple sector has given a tremendous return. As I said, that B2G has given a very good return. Now you need to rethink of that. If the in world economy is facing certain kind of a uncertainty, definitely global, every government will be cutting their some or other B2G related budget, and they may be taking more concentrated things on cautious approach, or maybe on they'll be allocating more on a defense, rather going straight forward on a development capex related capex, but which are linked with a global disruption or like kind of a global problems, whatever we are facing as of now. Now, another thing is that which sector where we can see certain clarity. Like I feel the healthcare industry will never stop. So people will be parking their money because money will flow. As of now, money is flowing towards all macro if you look at, no? So mostly it is going towards gold, silver. Any day we may see a sharp move. Every day we are looking at that sharp move. Also, you may see some sharp profit booking as well. Only thing is you need to look at that why you're buying. You should not buy anything at no at the last leg. Now, also, you should have a clarity that whenever you are investing at this moment, whenever such kind of a disruptions comes, no, it will not say you that okay, this is the right time to buy, this is the right instrument to buy. You should have your own straightforward logic that why you are buying it and how long you are going to hold, because it may go on a sideways for a long time. Because if you feel no, this is a time to just take 10 or 20% return here and there, it will not work. Because if you're closely observing market, you'll be seeing a lot of accumulation and lot of distribution is happening. And mostly we all are expecting a very good budget this time, whether it is a STCG, LTCG related card, whether it is a FDA related policies updation. So all those things, if it is coming up instead of a OPEX to CAPEX budget, if comes, we will be definitely seeing a lot of money flow in our economy as well. Whether it is undervalued, no. Whether it is overvalued extremely, definitely not. So as of now, it is in a somewhere that people are having a lot of issues that where is growth? When there is a global disruption, definitely you will not see a growth, because growth comes not from a like definitely India will grow with their own strength, but at the same time, no, a global disruption also will hamper or it will dent some or other businesses. We need to carefully look at that which are the businesses having overseas exposure, and we, as per me, we should avoid businesses which are having more like linked with a B2G related businesses. Instead of that, like a B2C related businesses, whether it is a healthcare, milk industry, food industry, this kind of a businesses will perform because people will consume, people will fall sick. So if you just look at those businesses and explore that which are the companies that are available at a reasonable valuation, and if you think of just accumulating all those businesses over a period of next say 5 6 months, definitely we are going to get a very good valuation, like value appreciation. Now the thing is that how to evaluate. There are two ways of doing evaluation. One is a growth, another one is that from a margin of safety point of view, that you are buying an undervalued business. I have explained in my video that how to evaluate. See, whenever you are buying a business, if you're not serious about, okay, fine, that I'm buying a business, I just want to give a random valuation. I have explained that also. Once again, maybe some uh, many businesses are there which has gone up like anything. Like if you take a example of a Amic Fortune. So company is doing 100 crore of top line, getting 1,000 crore of 10x of their sales. These are absurd valuation, because once you look at a PE, you will be feeling if company is growing at 30 40% rate, definitely I'm just giving an example. So don't think that this company is good or bad. I'm just giving my example that how I am evaluating this thing. It's not fine. Company will show that PEG is good, everything is good, everything undervalued. Also, you should look at how is their cash flow, how much cash is coming. If you look at no inconsistency in cash flow for last 2 years, and hardly they have any cash flow from operating activity. A company is getting a 48 of P and giving you only hardly 6 crore of cash flow. If this is the situation, and if you are paying those businesses and thinking that, okay, fine, this company will grow. This company may grow, man. Like this company may grow, this company may erode their valuation as well. Only thing is we need to be very, very careful what we are buying. So I feel that last 2, 3 years, people, even if you're not getting return 20, 30% down, you know that fine. So few businesses are at a very good valuation. Now the point is after evaluating good or bad business, because from number you can understand, okay, what is the EV EBITDA, what is the growth, whether cash flows are in sync, because this is a book profit, accounting profit. This is not actual cash flow. You need to look at whether cash is coming back or not. See, if it is a 6 crore, how long it will take to recover your 1225 crore? If I ask you to buy my business 1200 crore, you will be asking me that, okay, fine, you are asking 1200 crore. What asset you have in your hand? What is your net asset I'll get? So what is the profit I will do? How fast I can recover? Those will be going in your back of the mind. But when we come in a market, we depend on stories, narratives, and we buy businesses. It's not about only one stock. You will be seeing a multiple businesses which are driven by lot of narratives. If you come on a Mehai technology, you will see this company is having a 17 crore, 10 crore of this. uh, They are showing a negative cash flow. If you ever see a company with a negative cash flow and a very fishy and a getting a high valuation, those are businesses to clearly avoid. If you those companies are going on a circuit to circuit, see, you need to differentiate the first. You need to understand a business first. Okay, what business they are doing when you are doing screening and all. It's not only volume. It's not only volume. See, if you're buying at a see, sometimes what happen, no, valuation is a equilibrium. In a bull market, you may get a 20p. So in bear market, that stock may come down to 10p as well. That doesn't mean that you are buying a good business and bad business. Because eventually, if it is a good business, again a bull market will come back. Again, this business will perform and they will readjust and they will not come to their the last value point. Also, they will do a market cap expansion. The point is, when we are buying a business, we need to really look at that what exactly we are buying, what exactly they are doing, what numbers they are giving. It's not about that this company is giving a circuit. When you are going for that, be clear that you are buying a risky business. Don't show off that this has gone to 1 rupee to 100 rupee or 80 rupee, 90 rupee. So it came back to again at a 1 rupee. Company did is doing lot of manipulation. So and these businesses are very easy to track. Easy to track. I'll be giving some example to you that what kind of a business one should avoid in this juncture. See, first, Mehai, let me just give an example 100. Now one, now it has gone up to almost 18 rupees. Say it has gone up to 10x. So 10x if 10 15x if it has gone up, that means somewhere it has touched around 12 13 1400 crore market cap. Now from 1500 1400 crore market cap, again it came down to 100 crore. Why? Why such erosion is happening in a market cap? Look at a business. Don't buy a business with a very nominal profit and you don't know that why they are getting a it's continuous getting a circuit. They're coming with a new orders. Verify that how they can execute with such a small balance sheet. This is the balance sheet size. If you look at their number of orders, no, you will see that huge order they got. So continuously, some or other order will come. A big order will come, 600 crores, 500 crore. This kind of a order was coming and the stock was moving up. Where is the execution? No one will ask you. No one will tell you. No one will convey you. So don't just go and chase businesses since it is getting a circuit, since it's getting a sometimes not good business also. go and continuously it erodes value. Because even a Tata Motors came down during COVID, 60 rupees, 45 rupees. Then again it has gone up. End of the day, everything is a valuation. Now, my point is, if stock is not in sync with the valuation, then definitely it is going to erode their value. Whether it is a high, you take an example of Itcon, you will see the similar kind of a story is happening in a Itcon also. Stock has gone up from where 50 rupees to 700 rupees, almost a 15 times. That means this stock was somewhere around, say, 30 crore valuation. From 30 crore valuation to it has gone up 17 times, 15 times, 450 crore. Now again eroded something. Now my point is what exactly they are doing. Why they will get? I will get a 4 crore. Now cash flow if I come negative, uh, a company which are in a recruitment and staffing services. So how they can, like, I don't know that how, like, they are in a software business, lot of magazine award, lot of things are going on. You will see such many businesses in the market. Always do careful evaluation of those public holdings. Who are the stakeholders? Any new names? Any names which are having a repetitive holding in a businesses? Be careful that are they real stakeholders or they are just coming and taking it high. So whether it is a Itcon, whether it is Mehai, whether it is a BCG, you will see a similar kind of a story. Name will be different, but you'll be seeing, no, whenever you will search, you will see, okay, fantastic profit. But when it comes to cash flow, you will see hardly they have a cash from operating activity. Where it is going, a software company, IT company, where it is going. So whenever you do screening or scanning, no, make sure that you are buying a business. When cash flow from operating activity is negative, try to find out that why it is negative, when this growth will come. Many businesses are there at this moment which are at a very good valuation, which people may ignore as of now because now when price falls. So my straight criteria, I don't know, like when market will stop reacting all these newses, like whatever is happening. Because once Trump came, no, so many thing has already been, like, disruption has started. Now, when he will stop, no one knows. Japan is having crisis. So when they will declare, no one knows their bankruptcy. So many things will change. So don't be aggressive, but be on the right side. Don't be scared as well. Don't do panic as well. Because everyone is having a 20-30% down of their portfolio. If you're holding good quality businesses, market will bounce eventually. If you look at, if nothing is happening there, say, I don't think that any economy will challenge as of now because everyone is running with a high debt to GDP. So everyone will not go for a war and any kind of a extreme situation. If it goes, then it would look very ugly. But as of now, slowly, steadily, like, don't, like, this kind of uncertain situation is not first time we are facing. We have seen in 2008, we have seen dot-com bubbles, we have seen 2020 crisis, even what last 4-5 years also multiple disruption came, whether it is Ukraine, whether it is a Taiwan, China. So all these things will be coming because we are moving in this kind of a territory, where everything is related to power, how much power you are having. So it depends on if you are weak, if your data is weak, if your system is weak, if you are not building your skill, then definitely the other economy is going to dominate you. Whenever they will feel, no, you are in an uncomfortable situation, you will be getting dominated. It's not earlier like people will come and capture your country. So it will dominate in a different negotiation. They will put a tariff. So you need to be self-dependent. We are celebrating Independence Day, but are we skillful? We should ask all these questions, and we should always look at no that what as a country we can improve, what individual cases we can improve. So we are encouraging many, we are taking a leverage of YouTube. We are getting a lot of attention over there. But along with that, there is nothing wrong in doing YouTube and all. We should learn a lot of other skill also. That whether we can build certain thing, whether government should do a lot of revamp on education, lots of revamp, no age criteria, no stream criteria. Look at people, hire people, train them, make them work wherever they want to, they have their interest. Because no, instead of giving them some kind of a 2000 rupees, 1000 rupee, let them learn new things because India is having talent, agriculture, so many, lot of land, minerals we are also having. 150 crore people, 145 crore people. So we can dominate world. No one can ignore. The problem is this transition may take a 10 years, but it never late. If we take the right decision, like today onwards even, so we will be skillful country. So we are saying that we will be doing a semiconductor thing. We'll be saying that we are doing, whether we have that resources, whether government is publishing those resources. When we talk about, we should talk about how much resources we have done, because we are talking about the output. We should talk about the process will come through a skill. Where is a skill? If there is a gap, there will be a problem. So how China is 300 years ahead of us in terms of a skill? They were on almost in a similar position because they have understood that how they can progress. Here, your skill is a leverage, your power is leverage, and we are moving towards more of a, we are talking too much. We are like giving awards to people who are on. No, we don't bother about the military. Don't bother about who are taking care of our country. We are bothered about who is doing podcast. We are making multiple million views. So once we understand that, no, that we should give priority to skill, priority to talent. You just go in China and say that I want to produce this. Government will come and buy from you. You will get 100% guarantee that whatever you will produce. So here you open a trade license, like open a company, even a closed company, it takes 6 months time. Even if you open a company, it takes a lot of hurdles. You won't get a easy trade license, easy GST, ED, nothing. So those things has to change. It should come. And now another thing is now a lot of people coming with a IPOs. This is becoming a like a, whether they need lead manager, merchant banker, they'll be pitching, they'll be trying. That is their job. We need to think of that whether this company, how long they are doing, why they are doing last 2 years good, why their cash flow suddenly is positive. All those questions should come in our mind. Whether they're coming at a reasonable valuation. You should look businesses at least they're in bad and good times. Then you take your decisions. And if it is extremely good, you understand that okay, fine, this promoter is capable enough. Do a proper promoter scanning, evaluate it. Don't give too much EV/EBITDA. Do not give an absurd thing, because no growth is, if growth is real growth, real growth means company is showing a 20 crore to 40 crore profit, but in cash flow it is 1 crore, 2 crore. That is not real growth. That is not real PEG you are looking at. So it's a confused, you will get confused. You will be seeing some other ratios. You should go and check in depth numbers that what exactly is happening in a business. Business should come with a good growth, with a good cash flow, good promoter. None of the point one should miss. Because in bull market, even if you miss 1 or 2 points, you may be lucky. But in bear market, if you miss all those points, at least evaluate margin of safety. Many businesses are falling 20%, 30%. Okay, fine. but those businesses are good. But if I point out, okay, this business is good, this business is bad, you will get biased. So don't get biased. And we have done a platform, valuepicker.in. So we are uploading our little slowly, we'll be getting entire update. So we are working on so how we can present data most like a proper way. Like one can, when you are looking at a profit and loss statement, you are looking at how much company is earning interest, how much company is spending on interest, how much provision and contingencies are taking place. You are not looking at only sales. So all those things, finer details, we are trying to bring it so you can see those data properly. When you are looking at a business, you can see return on equity, how much, how it is going, how net in NPA is performing, how NIM is moving up. All this data will be getting in a snapshot view. So it will help you to take industry-wise decision. As of now, we have not uploaded all the data. We'll be doing maybe another 4 5 days or 10 days. We are working on some other parts. And lastly, I'll say that um, don't do very aggressive, take aggressive decision, take a slow decision. Think of ETF mutual fund route as well. At the same time, if you are unable to pick your businesses, put on a multi-cap fund, put on a some index. Though I'm not recommending, I'm just conveying that how I'm thinking. So if you're unable to evaluate that, okay, fine. If I take individual stock instead, that if I take some small cap ETF, eventually, if you start doing it, it will perform. It will perform. Market will erode. Market may erode another, like people may predict, and many things may happen. We don't know what Trump will do, what tomorrow, what will happen. So I won't comment on anything. But we are very close to some fear zone, and some budget related positive news also again will drive. But if you look at a 3 to 5 years time frame, if you don't talk about 1 or 2 months what is going to happen, definitely a lot of positive things will come. And I'm really hopeful that our India will do a lot of revamp on education, skill and development, because this is not only about a white collar job, it is all about a blue collar skillful job. Because we don't in China don't differentiate white collar and blue collar. They build skill. Whatever skill you have, you just have it. Like if you have the company with a skill can grow. Like a country with a skill also will grow, and they are going to dominate it. They will not come for capturing your country. They will dominate through trade deal. They will dominate through tariff. They will dominate through critical mineral. They will dominate through make manufacturing different devices, electrical equipment. So we need to build that. Thank you, everyone.